Hi guys, Brian's here, just introducing the latest feature to Quant Trading App. It is a new page called the SPY 0DTE Options Volume Chart. So it's listed under the Charts tab. All you have to do is just click it to reveal it, and then once you click this button here, it will pull up this page that we're seeing on the screen right here. To explain this page, let's start from the top left, and we see right here, this is the name of the page. So it's the options volume chart, because majority of these levels that we're seeing generated on this candlestick chart will be based on the SPY's options volume. So we'll get into that in a second. So this is the SPY, last traded price, and then the net change on the day. We have this auto refresh button here, and we'll get to that in a few minutes. Over on this side here, we have the 0DTE call open interest for the current day in which you're viewing, and then we have the 0DTE put open interest. So we can see that for today, the open interest is over 60% of the open interest for today falls under the category of being a put. And then at the bottom, we have the volume. So 52%, 52.56% to be exact, of the volume traded on the SPY for the 0DTE expiration is actually in puts, and then this is the call volume. On days that the market is going up, we'll generally see more call volume as to be expected. And on days when the market is going down, we'll generally see more put volume in the future. So probably by the end of this quarter or at the start of Q4 for this year, there will be a page within Quant Trading App that will have a lot more data in terms of, for those of you that would like to analyze the ratio between how much the price moves on the SPY relative to how much put volume there is, or open interest. All that information and data will be coming soon, but for now, this page is very useful, especially if you're an intraday trader or you like scalping. Now, I would suggest you guys also just make this full screen, and then you can hide the tab right here in your browser. And this is how I like to have it on one of my monitors. And then you can go about just paying attention to the price action. So I'm going to turn on the auto refresh feature just for now. So we'll turn this on. It will automatically save it to your settings, and then you'll see this countdown start right here. So every 5 minutes, this page will refresh itself, and it will have the new levels. Because if anything that we know, volume changes with every tick of the day, and the options volume is the same. So as the options volume is increasing, these numbers will change throughout the day in terms of the levels. The solid levels that you see on the chart will not change. However, I'm referring to the dash levels. So these levels right here, you see this is a dashed one, this is a dash one, this is a dash one, and these are dash ones here. And we'll get into those in a few minutes also. But anything that's dashed will be changing throughout the day, with the exception of this white strike or this gray strike that we see on our chart, because that's the max pain level for each day. It's always going to have the previous 1, 2, 3 days. This is the current trading day, and then this is showing for the next upcoming expiration. So we can get a little bit of an insight into the sentiment for the next trading day. What we have right here is the label. So max pain is letting us know that for today, 0DTE, the max pain for the SPY is 450, and that's what is this strike right here. We can see a lot of things are actually compounding at 450, so it's giving us a label, and that's why we'll see this strike price looks almost like a candy cane. That's because the max pain is here, as well as the number one previous call volume. So this is the strike price that had the most amount of call volume from the previous day. All of the solid levels are calculated based on the previous day, and that's why they do not change, because at the closing bell yesterday, these levels were saved. And at the same thing, so we see all these dash levels here. At the end of trading day today, these levels will be what will calculate tomorrow's levels, and these levels will no longer change. So as we go right down the list in terms of what do these levels mean, let's pay attention at first to just the blue levels. As you guys can see, this is a blue level here, this is a blue level, here's a blue level, here's a blue level, here's a blue level, and here's a blue level. This is what's referred to as the previous day's volume range. And again, the volume is based on the options chain. So it's the previous day's volume range for the options volume, not the price volume of the underlying here, not this volume which we're referring to. These are all calculated based on the options chain. So what this is saying, as we see today, this range right here, so from 447 up to 452, this is the range that think of it as the sentiment. This is the sentiment for yesterday in terms of how many options were traded. This is what most intraday participants were thinking was likely to be the range. If you're curious, the number is based on 20,000. So the strike price that have 20,000 both on the call and put side will create this range. You can think of it as a 1 standard deviation of volume. So think of it almost like a bell curve. So if we were to look at a bell curve, and this right here, we say 68% of all the volume occurred between the strike 447 and 451. That's creating our range for the majority of all the of volume traded yesterday, and that's what creates this range. And we have a trader within Quant Trading App that we want to thank for this, and her name is BK Brown, as she's done the most amount of research on this phenomenon, and she's the one that actually pointed out that the number is 20,000 based on the research and the findings of some traders within the public community have shared that number being significant. However, instead of manually tracking it yourself, or if you're someone like me that I like to mostly pay attention to my chart, and if I'm going to execute a trade, I go to the options chain, but I don't really like looking at the options chain too much throughout the day, as the numbers tend to confuse me at times, and I like to keep things pretty simple. So having the levels on the chart makes it easy for me to just get an idea of where's the sentiment. So as we can see, there's certain things that we'll learn, or certain quirks that can help us identify sometimes directionality, as well as if you're a non-directional trader, these will help you identify good trades to take. If you're a scalper or you're just a day trade, you can use these levels just to keep things simple in terms of taking them as a scalp trade. So the market opens here, market rallies, and then it gets rejected at this level. Then we can see it goes back later in the day, it holds over this level, and then ends up pushing up towards max pain. So these are just opportunities also to scalp. Here's a scalp up to the level, take profit. Oh, it's actually refreshing. We can see that it just hit the 5-minute mark, and then you see that just updated. So it's always pretty much at the close of every 5-minute candle, it will refresh and calculate to see if anything's changed. I don't believe anything changed just now, as we still have these dash levels here. As we were reviewing this date, this is August 3rd, which was last week Thursday. We can see on this chart right here how these levels came into play in terms of scalping. Also the following day here, you guys can see it sold off, ended up bouncing off this level. Want to look for additional confluences. This was the previous day's close. We can see that buyers ended up showing up. We can see volume started increasing as we hit these lows here, showing some signs of capitulation, and then price ended up bouncing back up to max pain. If this is your first time hearing about max pain, just know that the theory behind max pain is generally going to be that strike price will tend to act as a magnet. For most of us within Quant Trading App that have been looking for max pain for almost a year and a half now, we've seen it on our charts. We know that it tends to act as an extreme level of support and resistance. So in other words, if price, yes, you can think of it as also going to be a magnet, but when price gets there, you can think of it also as just going to be your standard supercharged support resistance, as I like to call it. So it's a little bit more powerful than your regular strike price. Another clue or thing that we know to look out for when we're looking at these volume ranges is that for the most part, I can't tell you exactly the percentage of the time yet, but that information is something we will have within Quant Trading App after a couple months. But majority of the time, price likes to stay within the previous day's volume range. So as we see right here, this blue level, the market actually opened up below it. This was a gap down last week Thursday. If I were to swipe over here, this is actually a screenshot from last week Friday. So here's the same Thursday that we're reviewing. So this was August 3rd. The market actually gapped down after already having a massive gap down, and it sold off, continued to sell off this day. There was a news catalyst that happened overnight. This is not normal activity for the S&P 500. It'll generally tend to go up. So we had a bearish catalyst overnight, and that's helped cause price to sell off as investors started taking profits or closing positions, because the market on the larger time frame has had a decent rally for the year of 2023. And then what we have is this next day, the market actually gaps down below the previous day's volume range. Now we did this 2 times in a row, and again, that's not something that's very common. So if we're looking at a reason to be long for this day, we can think of it as it stayed outside of the range a little bit too much, and it's more than likely going to want to return within the range. So this here, we had some confluences on this day. There were other levels on the charts pertaining to the Quant Trading App quant levels. I believe the intraday zone was around here, or I believe absolute gamma strike was around here or something. So this chart is just referencing the volume strikes and the max pain. Those are the only levels we see on this chart. And in addition, we have the intraday VWAP, because VWAP is very important for intraday traders. But what we have in this chart here, we can see that the price ended up rallying and it came back within the range. So this blue region here is the range in which I'm talking about, and ended up closing right at the range. And then we can see, if we jump back to the current one, so this is straight from the application from the site right now. We can see here's another day, market sells off, it ends up selling off, and then coming towards the close, it ended up coming back within the volume range. We can see for tomorrow, this is right now what the sentiment is looking like as the range for the SPY in terms of its volume range. So we have 448 to 445, but today's volume range is what we're seeing right here, is these blue dash levels. So that's what the VR is representing. So VR right here. So the volume range for today Friday is 450 to 445. So for tomorrow, those will be the levels that will be the solid blue ones that we'll see on our chart. But again, we're getting a little bit of a preview from right now. We don't have to wait for the market to close to see what the sentiment looks like for tomorrow, because this is based on tomorrow's expiration or the next expiration. So if it's Friday, it will be calculating the Monday expiration. If Monday is a holiday, then it will be calculating the Tuesday expiration, and so forth. The other strikes on our chart are these solid red and green strikes that are usually the widest on our charts. That is what we're going to call as the block volume. So in this case here, what we have for today, this is the previous call block. So this is the strike from the previous day. That was the last strike on the options chain. That was a call that had up to $20,000 in volume traded. So in other words, 453 had at least 20,000 in volume. 454 probably had 15,000 volume yesterday, this strike price. So that's why that's not the last strike price that had over 20,000 in volume. This one was. This level tends to act as, it just refreshed again. So let me actually turn off the auto refresh while I'm recording this video. I just wanted to demonstrate that for you guys, so it won't keep doing that in the middle of the recording. But what we have right here is this strike price will likely act as a very strong resistance level, and then we have this strike price is the opposite of that. So this is the strike price from yesterday that had the 20,000 puts volume. So the last strike yesterday, 442, that was the last strike on the options chain from yesterday that had at least 20,000 in volume. As you guys can see here today, the strike price that had at least $20,000 in volume, that was a put, was 440. So it went a little bit lower today. And then we can see that the call block, so the strike price for today that had at least 20,000 in volume currently, because the market's not closed, so this can push up, or so we'll find out at the close or in real time on the next refresh, is 451. So we kind of have a range for tomorrow of 451 down to 440, and that's what will be the solid levels for tomorrow. So we're seeing it's calculating live here. Then we have what's pretty self-explanatory. The other ones aside from the blocks would just be, here is the, if we take a look right here, you guys would see that this little dashed green level, that is the strike price for today's expiration that has the highest amount of put volume. And then we can see right here, this number one CVOL, that is the strike price that has the number one, so the most amount of call volume on today's expiration. If it's for the previous day, it will just say previous below, right next to it. So this yesterday is the strike price. 450 was the strike price that had the most amount of call volume from yesterday. Again, it also tends to act as a good support and resistance level, or it also can help gauge sentiment. If we see a lot of call volume coming into the options chain, it means investors are generally placing bets or placing wagers that price will go higher, or they're speculating it will go higher. It doesn't necessarily always mean that, because we also don't always know that, but at least it's giving us some sort of a measure or something to get a gauge on that sentiment. If we see all the levels shift up, so in terms of the number one call volume, let's just say it's higher, and then we also have the call block is also higher, and then we have the previous call block is also higher. You can think of it as a lot of the resistance levels are raising, so the ceiling is getting higher and higher, and that tends to make it a little bit easier for price to go up. It's very similar to gamma exposure, because gamma exposure is calculated also by the options chain, and the options chain is gamma exposure is usually calculating the open interest, whereas it's leaving the volume out of the equation. So this is just another tool or another measure in which we can use for Confluence for taking trades. In this case here today, how can we use this for an edge? You guys within Quant Trading App know. So if we were to just take a look at the intraday levels, here is the S&P 500 or the SPY, and then we can see we have our standard quants level. So this is the intraday zone here, and we can see that it was acting as support as price was struggling to go lower. Earlier on within the Discord, I mentioned that the volume range for today ended up dropping down to 445, but we weren't really seeing it getting much lower. Usually if price is going to go lower, we'll see the volume range getting lower and lower also. So this is one thing to use as Confluence, because the low of the day was right around here, 445 and a quarter or so. So right about here, 445 and 27 cents. And we can see this was 445 was the volume range. So we can think of it as this is probably going to act as our support as price wants to return back within this blue range right here. So we can say to ourselves, or we're expecting price to return. Now, if you're a technical analysis trading, you're looking for patterns, we have what's called an inverse head and shoulders. So I'm not one to necessarily call out, these patterns, or I don't really pay that much attention to them in terms of candlestick patterns, but I can't help, unwind or unlearn a lot of what I studied when I first started trading, just as a technician, and paying attention to chart patterns. What we also have right here is a wedge price broke out of, and then we can see we ended up rallying. But depending on how you trade, whatever you use, maybe you have some sort of SMA on your chart, and maybe there was some other confluence that you saw on your chart for here. I leave that up to you guys, because Quant Trading App is meant to supplement whatever trading style you already have. This is providing additional analysis and additional tools to see what's happening, as opposed to just the candlesticks and price action. It's giving you a gauge and sentiment, and you'll know this information that, hey, the market has gone a little bit too far for today based on the volume range, which is, we can think of the sentiment majority of the one standard deviation of volume was within this range. And again, can't give you the exact percentage of the time, but we will know that as QTA continues to aggregate and calculate this data. And that number, I would assume, would end up being somewhere around 60 something percent, probably in the high 60s to close 70% of the time. The SPY is going to want to close within this range, and then that will be something that we'll know. Eventually, we'll also know what percentage of how far out of the range does it usually go before it likes to return to the range. Again, all those types of stats and data will be something that's coming to QTA presumably by Q4. Any other levels, I think, on this chart, we've gone over the previous call block. We have the previous range, volume range, and then we have the call block for today. We have max pain. So I believe we've covered all of the levels. The upcoming expiration is what these dash ones on the charts. This is letting us know this is the call block for tomorrow, and this is the volume range for tomorrow. But again, these levels are going to change drastically overnight, and so it's just giving us a gauge. What this is letting us know right now is this is our volume range for tomorrow. So right now, price is a little bit above it, so maybe it won't go much higher, and this strike price might end up being of some sort of significance for tomorrow. We're still learning what's the upcoming day's expiration, how we can use this, but something that I know I like to look at is, let's just say this blue level was much higher, and let's just say this was also a little bit higher. This would make me lean a little bit more on the bullish side, because it's showing that the volume range for tomorrow is higher. So that's interesting to me, and whenever something is interesting, it generally might lead to some sort of a trade, or it's something that I'll log and journal. Say, for example, last week, if we were to take a look at within the Discord here, this is something that was pointed out. It's similar to the volume profile, or if we know anything about price action, is through contraction comes expansion, or through compression, as they say. So if price is compressing, it usually will like to expand. The same thing applies to the options volume profile. So if we see that's the range right here is shrinking, so here's the blue, it has shrunk. Here it's kind of stayed sideways here on the call side, and the put side end up shrinking. Whenever we see this, especially after 3 or 4 days or so, we can expect a large move. The screenshot was taken right before the big gap down that occurred. So if we come back to our chart right here, we can see that, this is the gap down in which I'm referring to, and then price ended up selling off. And then we can see the ranges started expanding a little bit here in terms of the volume, the options volume. Now I have, let's see here, I have this also on the chart here, the volume profile, because it's one way to think of it almost like the volume profile. As we know, the volume profile has a value area high, and then it has a value area low. That's what this blue box is referring to, or this blue rectangle. And then these tend to act as good support and resistance levels. And on top of that, what this is telling us is this is the one standard deviation of all of the volume for this trading day. So it's very similar concept, but what this is not going to show is there's a lot of gaps between this chart here, and sometimes we miss some sort of that information. If you're just looking at the volume profile, this is a different tool to measure a different thing. But if we were to take a look at last week here, here's a really good opportunity. So again, this is the screenshot, so this is not live. Here was last week Friday, here's the Thursday, here's the Wednesday, and here was the Tuesday. Last week, if you guys remember, within Quant Trading App, I took a really nice trade targeting this 453 level. The reason 453 is because I noticed there was this decent, pretty large gap here in the chart, but more importantly, it's very rare for price to go past the 20K block from the previous day. So knowing this was here, the assumption was we're probably going to return to that strike price. And we had enough confluence on this day to not think that price would go much lower. So I entered a very cheap butterfly here. This is already an over 1,000% winner, if you guys remember, within Quant Trading App last week. from using a very cheap out the money broken wing butterfly, and then I ended up running this similar trade just with a 1 DTE targeting back up to 453, and 453 was the topic of a decent amount of discussion within the Discord last week. For me, it was the indication that this was kind of just floating here left in space. There was nothing around it, so I had this assumption that maybe price will want to return back to it, so I went with a really cheap butterfly. And for those of you that don't know what butterfly spreads look like, here's an example of what I'm talking about. So this was that butterfly targeting 4,500, ended up being a really good winner. It cost $60, closed it out a little over 1,000% or around 1,000%, and the trade ended up closing out around 2,900%. But then the following day, let's see if I can find, here we go. So this is just open, this 1 DTE XSP butterfly targeting this 45.53 area here. So this was the range, so right in between that was 453 for tomorrow. That was the Thursday, and then this was the original butterfly that mentioned that ended up closing over 2,900. I didn't hold it all the way for this, it was just showing the potential of the trade. And then this was the Friday now. So as the market gapped up and it made its attempt, it was up $54 per unit. Again, it costed 52 cents to open this trade. This is the margin that it was using. And at the peak, I believe it ended up hitting, it was up about $95 or so. So well over 100% return. And later in the day, we ended up discussing that this was there was enough reason. We had the intraday zone was also here. So we had confluence for 453 to expect some sort of a rejection at that level. And regarding the 453 level, as it was discussed on Friday, here it was just pointing out 453 earlier on in the day, as a few of us were discussing the significance, as BK Brown pointed it out also. I also mentioned it here. And then later on in the day, we have as let's see when price ended up hitting the 453 level. So here we go. So price hit the 453, which is about 4,540 on the SPX. That's the equivalent. Here was the intraday zone, and we ended up getting a really sharp sell-off on Friday. There was no way to know price would have sold off that drastic, but in terms of potential, well over 3,000%. So at this point, puts were going for less than 50 cents, which is crazy. And this was just targeting the absolute Gex strike here. So that's what the purple levels on our chart. So the 4,500 put. Just highlighting what the 0 DTE did just from combining that information. So this, I'm hoping, would provide a lot confluence, a lot of edge to you guys' trading, and they're all simple levels. If you don't understand that much of it, think of it as a gauge for sentiments, but also use it just as your standard support and resistance levels, especially if you already have some other significant level on your charts. And it wouldn't be surprised, let's just say the market was going up to 449 today and end up getting rejected. Why is it rejected? You have a little bit of confluence right here. Let's just say the market ended up rallying straight up to this level. We know this is max pain. We also know that it's the volume range and so forth. So these levels, like any tool, the more you use it, the more you look at it, the more you'll pick up certain things, you'll learn, and then it should provide a lot more trading opportunities, especially for intraday traders, especially for scalpers. Just scalping between the ranges and the zones when price action is not as crazy or as choppy as it is for the last couple of days here. As we can see, this is not the cleanest or prettiest price action for the SPY, but when you start compounding this with some of the other tools that we already have, it provides another tremendous edge. Thanks for watching, guys. If you have any questions, leave them in the Discord and I'll be happy to answer. After the market closed, I decided to just come back on and just record a little bit of this outro here, just so you guys can see where price ended up closing. So this is the same chart, same day, recording this just right after the market closed. So I'll just make this back to full screen here. We can see that the last time this was generated was 1 minute after the market closed. And we can see, as we were talking about, I guess when I was recording it, the video was right around here or so. And we can see that price ended up hitting that 449 and it stalled out right here. So this is the #1 previous put volume from the previous day. So price, in a sense, if this was a bullish price action and the market opened around here, if price sold off down to 449, it probably would have acted as some sort of support, and we would have expected price to go up to 450, potentially all the way back up to 452 if we were looking for some continuous bullish price action. But in this case, since the market gapped down and it had a lot of selling pressure earlier in the day, and the market ended up getting back within the volume, previous day's volume range, which is this blue strike here and this blue strike, as we're expecting it to want to close within this range majority of the time. Remembering that is the key. We can see that there weren't any levels in between this until we rallied all the way up to 449. So this as an expected target. We're not using it as a reason to necessarily short because the market is about to close, but you guys can see here as I was talking about this beforehand, early in this video, I was just talking about 449. You guys can see the price action. Regarding taking trades off of this also, you guys can see here's VWAP, the markets. If we're not long down here at the intraday zone, as we were talking about, it's the inverted head and shoulders down here, buying strength, which is as price returns back above VWAP, and you guys can see that this level ended up holding. You guys know at around 12:30 or so, I shared a trade targeting 40.50 for tomorrow on the SPX, but the reason why I decided to look for a long entry on something over here was because of that. Now we're buying the backside strength here because this was weakness earlier in the day. We can see price stalls or struggles to go lower, then it gets back above VWAP. So buying as price gets back above VWAP, retraces, and it holds. This is something that you should be looking for if you're looking for a setup, or where do you take your entry? Are you looking to take a day trade? Are you looking to swing trade or something? The point of it is being able to identify that this now becomes some sort of a potential opportunity for you, and you're targeting something like 450 or 449. It's not always going to work out this cleanly, but this is a day in which the calls ended up going well over a few 100%. I believe it was 400% as mentioned within the Discord here, as I show you guys. So here we have it right here around 12:30. This is when I just mentioned, just going with this broken wing butterfly here for the Thursday expiration, but was just talking about the CPI report. The trader asked me what data am I looking at, and I just mentioned that. But as we scroll down here, this is the call in which I'm referring to. So we can see at this point the call was below $2 and it ended up rallying all the way up to 8 and change, ultimately hitting well over $12 by the closing time. So just wanted to highlight again, understanding this information and using it in practical real life trading examples. And if this was the only thing in which I was looking at, in combination with the fact that we had the Quant Trading App intraday levels here, buying the backside strength as we're back over VWAP, and then using this range or this area as our target, we can see there's a lot of opportunity to make huge trades. Now, if there were a lot of levels in between here from the options volume chart on this page, I probably would not have expected price to go that far, because I would have seen it as there being a lot of resistance. The same thing the previous day, you see this area was pretty open. There were no levels on the chart. The same thing here. There was very little levels or no levels until we got up to this strike price right here. Just want to include that and add it to the outro of this video. Take care.